We're joined by Marshall Mays, Director, Emerging Alpha Advisors. He joins us on the show. Thanks for joining us, Marshall. Emerging markets, and in particular India, have been rather volatile recently. Do you think we'll see any stability soon, or will this volatility just continue?
I think the general problem is that the growth numbers out of the United States looking weak as unemployment gets worse. The problems in Europe mean higher priced risk. And Japan has a question of will the recession be only 2 quarters or longer? All these factors make it difficult for those who have both an export orientation and the need to raise capital in the markets. That means India, above all, has got a little bit of a problem. But certainly the biggest problem is the central bank, which is trying to do its duty and keeping the economy cool, which means it needs to keep tightening a bit longer. Those who expect to keep the stock markets higher in places like India that are particularly leveraged right now are going to be disappointed, I'm afraid.
Marshall, you can see the moves coming in by the RBI, who's absolutely adamant to tame that soaring inflation. Do you perhaps worry about its impact on growth and thereby on the equity markets as a whole in the medium term?
I tend to be a little bit below consensus on most GDP numbers this year in the region. Perhaps only in Taiwan do I see some hope for a little bit of a boost in spite of its dependence on Japan. The Indian market in particular is one that's going to be a little bit cooler than most people expect because the RBI is not finished. I think there's just there's been too much credit growth in the last year and a half. Even though it's slowing down, they're trying to offset credit growth with tighter cost of money. And those problems are not really there resolved. As long as the government has a fiscal deficit of the scale it's running right now and refuses to step back because of election concerns, central bank's going to have to tighten.
Marshall, if the sell-off in commodity prices continues, which at least seems the consensus view when it comes to analysts, do you think it will boost emerging markets as essentially it will tame the soaring inflation, or then essentially the situation might just arise where a sell-off might occur across asset classes?
Well, the fall-off in commodity prices is a result of a slight slowing of the growth expectations in the market. So it's a circular process. I don't think it's a virtuous cycle either. I think that the lowering of prices in commodities is a temporary lull. The general trend, even if we have a significant correction in the market overall, is going to be for long-term growth. I think if the economies do cool down a bit further, as I expect, commodity prices could be off another 5% from where they are right now, but that's not much. That's small compared to the last 2 years of volatility.
And finally, Marshall, at this point in time, what is your recommendation? Do you believe that money will flow out of emerging markets and perhaps pour into the developed markets?
Well, the real growth you're going to see, even in this period now, is going to be in the emerging markets, whether it be Asia or elsewhere, but particularly the Asian area. And I think the problem is that people are used to seeing quick turnarounds, and cash flows back and forth make a big difference in the price of the index. So people have to be willing to take a medium-term view rather than a short-term view. Precisely timing the market is difficult this time. I think the general growth in the developed markets is still under shall I say, a ceiling right now. It may have reached its bottoms, but I think the upside is not anywhere near in sight. So the tendency of people to reallocate a little bit of money to Asia, for example, is still there. The problem is that many of the markets have been near their top in allocation. Price-earnings ratios were a bit stretched. Even though there's been some good growth numbers in earnings, they haven't really been justified by the price-earnings ratios. Now, given that, we've seen a justified cooling off. I expect another 5, maybe 10% downside from here. And generally, as people come back from the summer holiday as usual, after cooling off in the summer, I think the market will get hot again in the fourth quarter.